Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. What a brutal 24 or really 12 hours it has been for the cryptocurrency space, and that's exactly what we're going to be diving into in this cryptocurrency market update. We are, as we always do with these updates, going to take a look at the external world around us, as it is absolutely at play. Given the nature of our market cap and some of the players, the institutions that are involved, and we've shown you plenty of data to suggest that institutions throughout 2021 position themselves within crypto, we are affected and correlated by what happens on a global financial scale. Very quickly, this is Bitcoin and the dollar. We know we have the FOMC talks, which is the Federal Reserve, come together and they talk and kind of give an outlook on the future. And this is the S&P 500 sinks as FOMC meeting minutes hints at earlier, faster rate hikes. Now, this is all he says, she says, as far as I'm concerned, because I think the Federal Reserve are largely, they can't do anything, any kind of a significant rate hike, because they would cripple emerging markets, emerging nations, and of course they own debt themselves. So they can't be too sort of frivolous with this. However, this has seen an effect, certainly on the S&P, which sold off. This is all correlated with Bitcoin, and it's why we give these daily cryptocurrency market updates, to show you that as an investor, you need to broaden your horizon. You need to look at the world around you, as there's correlations at play there. So we will be diving into Bitcoin. Bitcoin saw a brutal sell-off, and what really promotes this sell-off is, of course, liquidations. We had $886 million worth of liquidations taking place. It actually looks like we had quite a lot of liquidations actually take place in the Ethereum side of things. And this is really, greed ruins it for everybody, because this is people who are leveraged. These were long leverages that all essentially got liquidated. There's absolutely manipulation at play in the cryptocurrency market. People are manipulating these markets, and who benefits? And there's a real answer that lies in this question from liquidations taking place. It's the exchanges. They make money on liquidations, believe it or believe it not. I'm not suggesting they're the ones causing it, but there are certainly people that can move this market and know what they're doing. And one question I would get asked is, well, if we only saw $886 million worth of liquidations, we wiped off nearly $20 billion dollars in terms of a market cap. So how does that work? Well, we've spoken about how price is essentially came about. And its price is determined by buy and sell pressure on the liquid supply. So what's on exchanges. So it's often a very unfair representation of the overall value. So Bitcoin, for example, when it was at $1 trillion in terms of market cap, you could never get $1 trillion out of Bitcoin, nor had $1 trillion ever gone into it. What market cap is, it's a secondary factor after the price, and they just essentially times the price by the supply and give a market cap, even though it's always unrealized, if that makes sense. So it takes a lot less money, and we did this experiment when Bitcoin was at $1 trillion. It takes a lot less money flowing into Bitcoin to move it 1% or down 1% than what's actually in the market cap. So that's just an important point for me to remember. Lots of liquidations took place. You had, obviously, now that we've got things like open interest, perpetual futures open interests, they also, Bitcoin has wiped out roughly 315 million of perpetual future open interests. We've got devices surrounding this market, which all weighs on the sell pressure. These guys essentially become forced sellers. The people that get liquidated become forced sellers, and that's why you see these horrible, nasty wicks. It was certainly significant. I would say it was triggered largely by this, which of course triggered the S&P to sell off. We're seeing a little bit of fluctuation with the FTSE, although in actual fact, we saw strength for the GBP. I know you guys don't really trade Forex. I'm not a Forex trader, but I do keep an eye on the Forex market, as it's very correlated to everything, because we weigh these assets up in those fiat systems. We saw GBP actually gain a little bit of strength against the dollar. So people are sort of bracing themselves. In times of risk, in times of uncertainty, people will take and minimize risk. They'll mitigate it. Crypto is still very risky and new. Certainly to somebody like myself, who is, I'm not going to call myself a visionary, but has a long-term outlook on crypto and thinks it's going to be very well and certainly here to stay. This doesn't worry me in the slightest. But for certain institutions, they will take risk off the table if they think there's going to become periods of volatility. The Bitcoin Fear and Index is at 15. This is historically quite a good time to actually pick up some Bitcoin or some crypto. So Ethereum, of course, followed. I could actually see some more downside here. But this was the pattern that we essentially had, and we have noted this on a number of videos now, that this structure over here is very similar to the structure that we're currently setting up. And you can see that it still is. You potentially could see, hopefully, something like this. But I ultimately think, even though we've broken down of this ascending support, I still think you could see continuation to the upside. And we still play out in a similar manner to what we did back in March 2020 and what took place after. Markets are just volatile, and we've given you the reasons. There's a lot going on behind the scenes. Some good news is the fact that the Asia selling pressure has essentially somewhat deceased. Now, we said that China, when you look at the Bitcoin chart, has had a huge role to play within it. Whether that be them banning miners, forcing miners to become forced sellers, which are some of the largest sellers, by the way, or whether that be banning the citizens from interacting with exchanges, thus forcing them to sell. That sell pressure has somewhat ceased, if not ceased. This is from Will Clement, who's a fantastic on-chain analyzer. Asia ramped up selling of Bitcoin into the end of the year. This selling pressure has now decreased substantially, and this is from Root, who is essentially also confirming that. So that's good news. Largely, this is due to liquidations, and it's all tethered to global markets around us, and we've shown you that. These are a couple of articles. This is from Raoul Pal, says, a reasonable chance crypto market could 100x by 2030. Happen to agree with him. I think crypto is going to absolutely... You've not seen anything yet in terms of a boom for crypto. Remember, it's not seen anywhere near mass adoption yet. It's a very small portion of the population that actually own crypto, and it's a percent of those, a very small percent of those that actually use it on a day-to-day basis, if any. That's all still to come. Here was some more news. The Bitcoin ETF decision delayed. The SEC commissioner wonders why. So we've told you why they keep delaying a spot ETF. There's no reason for them to delay it on the grounds of what the SEC was there to do, and that is to protect investors. A spot ETF would actually be more protective than a futures ETF. But the reason that they're not approving an ETF yet, and it goes back to, remember we showed you the fact that Goldman Sachs were essentially saying they think that Bitcoin could eat up a lot of gold's market share as a store of value, is precisely that. They understand that if they go ahead and authorize a Bitcoin spot ETF, that's going to eat into other markets they probably have vested interests in. So this is hopefully what these videos on a daily basis are showing you. You need to look at everything around you. We often have blinkers on within the crypto space, and it's all we focus on. I'm guilty of doing that. But you need to broaden your horizon, and the answers will often lie externally rather than in our space. And certainly, we know there's a number of external reasons why markets have sold off. And of course, when you look at Bitcoin being as leveraged as it is and as greed ridden as it is, we get this cascade of liquidations that take place, which really drive us. So same things happen for this. I could see Bitcoin, like I say, if we are doing this, you could see something like this where we kind of keep drizzling before we get that continuation. Hang in there, guys. Remember what you're investing in. Same thing for Ethereum. Quite a bloodletting for Ethereum, to be honest with you. We didn't really see any strength at all, but your altcoins just get really dragged down by Bitcoin. Bitcoin is that tide that rises and sinks all ships, and everything is tethered to. Cardano is a heartbreaker of a cryptocurrency. I love ADA. I still hold all my ADA and still dollar cost average as frequently as I possibly can, because I think it's got a very bright future and has got fundamental reasons why it's going to do very well around the corner. However, this 3-4 months has been a heartbreaker of 4 months, certainly given as bullish as I've been on it. The tides will turn, ladies and gentlemen. We're just going through what every emerging market has, and that's volatility. And this is a chart that you really want to be watching, which is the US dollar and, of course, Bitcoin, because you can see they are 100% correlated. Bitcoin down, dollar up. And we would like to see a bit of a bloodletting here for the dollar. However, there is a kind of macro, which was pointed out by the Crypto Sniper, continuation pattern for the dollar, which is this kind of head and shoulders potential. Complex head, shoulder, break to the upside. And this could be supported fundamentally with things like rate hikes and so on and so forth. But the Fed, it's a lot of... And another thing that I will mention is we did look at controversial data that actually suggests that when you get a rate hike, you'll still see a boom in Z asset or the stock market, which we were looking at for at least 6 months after that regime kicks in. You can see the S&P got really smashed. S&P hasn't opened yet, but we'll see what happens. It might find a bit of strength, which is likely after you get sort of such a candle such as this. But the FTSE's really going to be tethered to it. We did see, like I say, an uptick on the GBP against the US dollar. So that's really the bulk of what I have for you in this video. Important for me to get on here, certainly in times of extreme fear. I'm not really feeling it. It isn't pleasant to experience it. I mean, my portfolio swings around a lot, even given just this sort of a move. However, you know, I'm kind of battle hardened within the crypto space. I've been here for 5 years, and I've really seen some of the nastiest sell-offs that crypto and Bitcoin's had to offer. And ultimately, it's a very resilient asset in the sense that, you know, it comes back time and time again. And I think it's going to continue to do so. And the reason being is because the fundamentals are there. So whatever they decide to do, whatever the markets, which are often an unfair representation of value, price is often an unfair representation of value, decide to do, you fall back on your fundamentals and everything is a-okay. So I'm not worried in the slightest. I still think we see continuation. I still think Bitcoin's going a lot higher. I still think Ethereum's going a lot higher. Cardano's going a lot higher. And many of the cryptocurrencies have real staying power. This is just a brutal sell-off that we will get through, ladies and gentlemen. And remember, it's those rainy days that make the sunny ones so enjoyable. Thank you very much for watching, guys. I'll catch you all in the next YouTube video. If you've enjoyed the content, a like is always appreciated. So is a comment. Hit that subscribe button. Head over to my Twitter at @RealAllInCrypto for some more timely updates. And I'll catch you all in the next YouTube video. Thank you very much for watching, guys.